Traders, welcome back to another price action trading lesson. We're looking at S&P 500 and many futures. We're going to be using pure price action to help us understand market's behavior. And today's session opened with consolidation at the bottom, and right after market open, we transform into secondary consolidation, but this time at the top part of this overall structure. Now, this is not particularly normal consolidation, and why is that? Well, because we traded up into this. Okay, and this is important. There's a slight bullish bias. So this is something we need to keep in back of our minds. So the supportive indicated 1-bar EMA is going sideways, completely flat. We have breaking new high, uptrend played out. So I have to identify the support. I have to identify the resistance as a price action trader, so I understand where are the important price levels for this consolidation, for this trading range. Flat EMA and downtrend played out with the break, push to new extreme. And we have one leg down, break, second leg down. Now prices are already bouncing off of the support. So this is a good sign that the buyers are buying at the bottom. We have a high low here, but we're not full at the EMA. It's in the middle of the trading range. I gotta be careful. Overall, when I was watching this live, I wasn't really looking for any setup. It's simply because the bias is so unclear. The overall structure is so choppy and so messy. I was waiting for price action to give me something clear. Now we have interesting setup because this is the lowest low of this correction down, where I'm going to reset the count. We bounce off the key level. First entry short, pull back, second entry short failure. Now still, this is rather aggressive setup because we're a little bit stacked, but felt second entry short is now stronger than high low because that's the trap. That's the second entry short failure, and there is a nice bullish tail off of these lows. You're most likely heading to the top of the trend range, so this is decent high probability setup. I prefer to be patient the whole time, but if you have to take a setup, this is the one that you can consider. Uptrend played out with the break, push to new extreme, and now it is important to take into consideration what we discussed earlier. Okay, I'm not going to be fading the breakout. Now, most breakouts out of trend ranges according to rules will fail, so expect prices to go lower eventually. But because this is not consolidation straight from the beginning of the session, we traded up from the beginning of the session. So because there is a slight bullish bias, I cannot predict it exactly which breakout is going to fail. So for this reason, I need to see push below EMA and I need to see some confirmation setup. So for this reason, I'm not trying to sell. Okay, we have a lower high, but it's an inside bar. I'm trying to right now think about felt second entry long. We have a new high, first entry long, pull back, second entry long failure. Because I'm playing the trend range rules, I'm not going to draw wider channel. It doesn't really fit that well. Plus, there is no reason for this. We are in a trend range, so I want to follow tighter channels, breaking new high. Felt second entry long would be nice. And we have a new high, first entry long, pull back, second entry long failure. All the buyers playing some bigger pattern to the upside are going to get trapped, and this is great. Felt second entry long, great signal bar. So felt second entry long, trap right here. Worked for decent scalp. I took this out of myself, and prices trade up higher. So now that I see prices going higher, I'm definitely right now paying attention to this price action. I am pausing looking to go short. Why? Well, because this is not what was supposed to happen. If this is a healthy consolidation, prices were supposed to go off of these highs all the way down here. The fact that we're back above EMA is indicating that we started the session with the bullish bias. So this is why it's so important to not only pay attention to this consolidation, zoom out and pay attention to the entire structure, because this detail is important. This detail is explaining why prices are right now heading back above the trend range. Because if this trend range started without this price action to the left, if this trend range started with just this consolidation, it most likely will go lower all the way down here. But right now, I gotta be careful. I cannot go long because we are part of some consolidation. No reason for me to go long. I cannot draw any wider pattern. This is too broad, too flat. So I gotta be careful now. I cannot go short, I cannot go long. So this is the area of development where you have conflicting variables. You can see both sides are getting trapped. Market eventually broke lower. Now we have one leg down, break, second leg down. But once prices keep trending lower again, this is where I like to be drawing wider downtrend like this, because it looks like the sellers sold over these highs. We're heading all the way to the bottom, and we're quite far away from the initial downtrend. So there's a brand new downtrend develop. We have a second entry short, but of course I cannot sell. We're far from the EMA. Not even the tail is touching it, not even the tail. So I definitely cannot sell. Right now, prices are forming small consolidation, correction to the EMA, and this right here is a failed breakout at the key entry point at the trend line. The downtrend needs to get new extreme, big bearish bar, decent hypervoltage setup because the downtrend needs to get new extreme. We identify the pattern, we're at the key entry point, great signal bar, and market keeps working lower. Now, this structure today, I'm going to zoom back again, is very similar, if you remember, to what we talked about Wednesday, September 25th. Okay, we also started with unclear consolidation, and we also had stronger bearish pressure while the EMA was rejecting. Okay, we can't even break above the EMA, and prices are going down after failed breakout, so we can have stronger bearish push down. So because of this, I'm not going to be thinking about buying. This is too steep, looks like a one leg working lower. The break is not even convincing. So remember, you can go and check our review from the Wednesday. So I gotta be careful. I cannot sell, I cannot go long, and prices keep trending lower. So because EMA rejected prices again only after first entry short, key level was negated, this is still looking like a one seamless push lower. I'm going to draw right now wider downtrend, something like this. It aligns nicely with the EMA. You can see how nicely the trend line fits. So right now the structure is transforming into a trending market, bearish trend. It aligns with the EMA, and I'm thinking about second entry short at the key entry point. We have a micro double bottom, new low first entry short, count reset, first entry short again, and prices are overshooting the trend channel line. You can see the trend channel line has a lot of confirmations, so there is no reason for me to place the trend channel line at the bottom and have no confirmations. The more confirmations I have, the more I can treat it as overshoot. If I have only, let's say, one swing, then yes, I can consider moving trend channel line lower. But because I have a lot of confirmations here, and here, I can treat this as overshoot. This is oversold area, which means we can expect prices to break the trend line, sometimes even reverse the market, but we can definitely expect the stronger correction in the opposite direction. So even though the bias is to the downside, okay, the overshoot is right now letting us know that we have to pause looking to sell at least for a while. I have to skip the very first second entry short after overshoot because we need to see market to go back into balance. We have a break in new high. We have a new low first entry short, second entry short. I cannot sell second entry short. This is so common because you can picture the overshoot trying to generate stronger pressure, and even though it is off the key entry point, the pressure needs to be relieved, and most likely it's going to break the trend line. So this is why we skip the second entry short, and this is why when we have overshoot, we even don't want to take the setup off the key entry point because overshoot can lead to break of a trend line or even reversal. So I'm gonna be careful. Break. Okay, now we have a new high by a couple ticks. This is what I like to see. Break, push to a new extreme, and I was really considering double trap also would be triple test. Now, double trap got negated because we didn't close below EMA, but triple top is still an option, but it didn't trigger. Not only the single bar didn't close on its low, but since it didn't get a break below this bar right here, the single bar for triple test didn't trigger. I scratched the order and I wanted to see a lower high. It still worked for a small scalp, actually decent scalp, especially if you use limit order, but you know, since it didn't trigger, the signal bar was already weak, and once I have overshoot, you know, anything can happen. So you have to remember that once you have overshoot, you cannot be as aggressive as when you have clean structure without overshoot. So even though it worked for a scalp, you know, didn't trigger, weak close, and you have overshoot, can I get lower high? I was looking for lower high here, no lower high. We formed small consolidation. Overshoot created stronger correction. Now, we still expect new low for this downtrend. This is our main pattern right now. If you follow the trend line rule, we expect new low to be tested. So we're not thinking about buying. In fact, as you can see, EMA flat, and we have a small consolidation part of this downtrend. And this is similar to what happened right here, but on a little bit larger frame. This is a failed breakout. Initial signal bar, however, is terrible, so you have to use double bar entry, but it's okay because the close is fairly close to the low of this bar. So you can consider this as a visual failed breakout, decent setup because we expect new low, downtrend played out. This is the first major leg, pullback, second major leg. You can get a lower high confirmation setup over the failed breakout. We expect new low, no, and downtrend played out with the break and push to new extreme. So I'm gonna pause looking to go short. I'm gonna redraw the short-term uptrend. I can see that the EMA is flattening. So I can start predicting possible small consolidation again, because after breaking new extreme, we can have correction or reversal. Because we already have a break in new high, one top, double top, triple top, it doesn't look too good for the bulls to reverse the market because we have a small uptrend with the break push to a new extreme. We have a serious push below EMA, and we have a lower high confirmation setup. This lower high is confirming the second entry short. It's confirming the triple top. It's overall confirming the decent bearish bias, because if I'm going to really zoom out, you can see this is where we drew our downtrend, but the real downtrend actually started here. So there is a chance that there is a slightly wider pattern, something like this. Even though you may not have the pattern at the time, you don't really need the pattern. You're focusing on the small consolidation, and you're focusing on the fact that the uptrend played out and you're already back below EMA. This is a decent lower high confirmation setup because prices should test the new low. Now we have a failed second entry long. It's a shame it didn't take higher above this bar. New high, the highest high of the correction. First entry long, pullback, second entry long, failure. Second entry long, failure. Decent bar, EMA rejected once, twice. Prices keep trending lower, and our wider downtrend has overshoot again. So we have another overshoot, so we can expect stronger pullback in the opposite direction. Now, after this key entry point right here got confirmed, then we can take this downtrend into consideration. However, overshoot is in play, so we're most likely going to have to skip the very first second entry short. We have a second entry short here, but we can't sell it because it is an inside bar. It's not even touching the EMA. So okay, it's not even the EMA. We have overshoot, so we can have stronger pullback in the opposite direction, which is exactly happening. Once again, I cannot sell here because after overshoot we can have stronger pullback. I need to see the push below EMA. I need to see push below EMA, the resumption that the sellers are back in the market. Okay, also you can see the move up looks quite strong. Why we have an uptrend here, break, and push to a new high is much longer than the initial uptrend. There's a possibility there is another channel. So there are a couple of reasons why we have to skip this. Overshoot, stronger correction, and this stronger secondary leg. Prices keep going sideways, and I'm starting to be way too choppy and way too late because market is about to close. So this is the overall structure for today. Double overshoot here, you can see it always leads to stronger pullback, so you have to be a little bit more careful to jump into selling straight after the overshoot. I mean, this is almost identical day to what we had on Wednesday. We also started with small consolidation. It got very choppy, easy to take impulsive setup, and then we broke lower and a nice downtrend was established. So very similar price action. Once again, I wasn't even trading this right here because it was so unclear. We traded up, so you expect bullish buys, but at the same time, if you can see, the prices are hovering right around the important key level, so I cannot go long around this. I cannot sell. So especially since it is right after open, remember you have the entire day in front of you to take some nice setup and wait for decent setup, so you don't have to rush to take setup. Sometimes this is a very common beginner traders. They have to take a setup straight after market opens because they're rushing, and they're really waiting for price action to align. You need to have the context, solid key entry point, and good pattern without conflicting variables. So you need to let price action establish a little bit, and once it established, it gets a little bit more easier. Once again here, the reason why we broke higher is the slight bullish bias. So felt second entry long work for a scalp, but once you push the ball higher, I gotta be a little bit more careful because the bullish bias is kicking in. But shortly after the downtrend started, and a couple setups on the way down. So yeah, I hope you had a good trading day. I'm gonna wrap it up, and I'm gonna talk to you next time. Good luck with your trading.